Hi everybody, and welcome to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Portfolio Manager at McNichol & Associates Asset Management. Just a couple of things today. First, as always, remember to like this video, and if you haven't done so already, you can subscribe to our YouTube channel to make sure that you get these videos every Friday as we publish them. And a special thank you to everyone who liked us last week. This week I will be shorter than usual as I've been away and I'm just getting back into harness today. So I will review what happened and see where the FANGs stand, but I will not pursue a more aggressive agenda. However, being physically away does not mean that I have ignored developments or stopped thinking about the market. In any case, my modern Dick Tracy two-way wrist radio, aka my cell phone, means that I am never very far away from what's going on in any case. As we get closer and closer to the super growth price for the stock market, that is a price to book ratio for the S&P 500 of 3.5 times book, the market top in 2000, which clients will recall from last week's webinar is not very far away as far as we can see. I've been thinking, how do growth stocks, that is those companies that keep right on growing, lose altitude and come back to earth when they get to a very extreme high? And I remembered quite vividly one such role model in the 2000 to 2002 market. And it occurred to me that this could well be our template for some of the FANG stocks in whatever market is to come. So next week, I will roll it out and I'll show you how a bear market, if one is coming, can be a source of fun and profit if you know what to look for. This will be a hypothesis, mind you, but I think it is one that is quite realistic. Finally, as a reminder, if you've been watching FANG Friday with us for over a year now and want to take that next step, send us an email outlining where you are in your investment journey. This week, our newest client told us during our one-on-one introductory session that he had been watching FANG Friday for months before he signed up, but was happy that he took that next step to becoming a more confident investor. If you want to do as he did and take that next step, there will be details at the end of the video. With that in mind, let's take a look at the FANGs. Well, here is Amazon, which with the new balance sheet, remember I told you that there had been an updated balance sheet. It turns out that the HB4 price was 32.62, not the 2,900 level that the old balance sheet had showed. And this time, however, Amazon is right up against that level and so far has been unable to break out. I'm not going to say that it's not, but on the other hand, it hasn't as of yet. Microsoft, look at the same thing, except it's been sort of dithering this time on either side of the line of the HB2. And remember last year when we started off our FANG Friday and we kept following Microsoft and it kept banging up against its HB1 and banging up and it wouldn't break out. Well, finally when it did, of course, it had a lovely run, but it's back to doing the same thing once again. So no decision. Netflix, well, Netflix tried to break out, but has failed so far. And we are fairly close to perhaps getting a sell signal on the stock. You will recall that last year and early this year, we have been watching the stock at the HB4 and it wouldn't break out and it wouldn't break out. Maybe it turns out that it really didn't want to. This was all an accident. Facebook, on the other hand, just goes from strength to strength, doesn't it? It broke out check back dutifully and has been moving up very nicely towards its bubble price. That's 7.4 times book value. But note, okay, note that that was the high back in 2018, and I think it'll be very difficult for this stock to actually break out here. We will be watching that with considerable interest, but it's more likely to be a sell signal than an ongoing buy. Apple, well, Apple just keeps on going. Although I have to remind you of one thing. Remember a couple of weeks ago we had to kind of radically revise where the breakpoints were with the new balance sheet. Well, Apple just announced that it's borrowing $5 billion to buy back even more stock, which means that those structural breakpoints are going to continue to fall. So I don't know where the HB5 is going to be, but I don't think it's going to be nearly as high as 525. So we will be watching this very, very closely. Alphabet, we talked about Alphabet last week, when we had a sort of one of the viewers bought the stock at a high and then watched it sink. Well, this I told you, watch for the stock. It should check back to the low super growth. It has done that, and now it's sort of turning around again, trying to get up. I cannot see that this stock is going to get to its mid-super growth. That's 5.5 times book value. I just can't see it. It hasn't done it in years and years, and I doubt that it's going to do it now. Finally, NVIDIA, and I wanted to show the longer-term view of NVIDIA because it's coming up to its HB4, and that was where it peaked out back in 2017. Now, it took its time, but look at all the trading that occurred in between there, back and forth between those two breakpoints. And let me tell you, these two breakpoints are not, they kind of look trivial on these charts, but these are not trivial breakpoints. Okay, the distance from the HB4 to the HB3 is minus 22%. And if you got a good drop to the HB3 and then it rallied back up to the HB4, that's plus 28%. So there are tremendous trading opportunities to be had when you get stocks up in the bubble zone. Their fair market values may be a little questionable. In fact, the stock is about 67% overvalued here, but nonetheless, there can be very interesting trading opportunities for those people who are so inclined. Anyway, in conclusion, Amazon is somewhat questionable and sitting right on the HB3 breakpoint. It's a bit of a conundrum as far as I'm concerned. Not yet committed to heading any higher. And I got to say one thing about Amazon. I checked its earnings to price ratio. It fell to 1%. The last time that I remember a large stock, a large seasoned stock having reached an earnings to price ratio of 1% was back in 2000 with a little company that some people might remember called Nortel. And that was precisely where we issued our sell recommendation on the stock very publicly at that time. So Amazon is there as well. It may explain a lot why the stock isn't breaking out. Microsoft continues to dither. Nothing we can say there. Took a long time to break out last year. I don't know whether it'll have time to do it this year. And Netflix, my goodness, what an annoying company that is. It appears unwilling to hold in and head higher. On the buy-hold side, Facebook remains in an uptrend, but please note that upside target, okay, at its bubble price, its old high. That may be everything that's going. NVIDIA is also closing in on an extreme high, and I wouldn't count on it going any higher. Apple keeps chugging along, but we know with those share buybacks that its balance sheet is subject to almost extreme change. Alphabet has set back and tested its breakout, remembering our discussion of last week. But again, the evidence does not suggest that it's going to reach its next higher breakpoint, its MSG price, or 5.5 times book. As I said last week, I would be unprepared to recommend an outright buy on any stocks that are this expensive. But others who pay no attention to balance sheets and PE ratios may well be more positive. However, the overall market is approaching a strong, likely sell level, which makes me even more wary. If what you see has interested you, and you would like to see what your own stocks are telling you, and if you want to take the next step in your investing journey, as so many have over the last few months, then send us an email at info@strategicanalysis.ca. Clients get a lot of benefits, not just access to over 3,000 charts of North American stocks in Canada and the US, but also daily commentary, trade ideas, and weekly webinars where we go into the nitty-gritty details of how to use our charts in order to become a better investor. When you sign up, I will personally take you through our system on a one-on-one video conference and show you how you can use it to become a more confident and profitable investor. If this sounds like something you think is in line with your goals, then let us take the next step together. For now, this has been Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I will see you next week.